What is going on, Alpha Owners? Hope you fine people are doing fine on Friday. I guess we'll go with that. Fine Fridays, Freaky Fridays, Fake Out Fridays. I don't know. It's something like that. Um, yeah, seen some pretty good action on the market here today. Tried to make a run up earlier in the day to yesterday's highs. We did turn a little bit positive, and then that was pretty much it on the SPY. After we got a little bit positive, barely broke the close. You can tell we did it right here around 11:30 Eastern time. Once we did that, the market did reverse down. So it's got a funky little head and shoulders pattern here, kind of shaping up. It's got a shoulder, little neck or head, neck, shoulder, and then we've broken down. So basically, anything up into about the 414 to about the 415 level is now going to be some pretty good resistance here on the intraday level. As you know, that's kind of the way that little head and shoulders action kind of sets up. So see what happens here. But we did move down over the past hour, a little bit over an hour, down to roughly where we opened on the trading day. Basically tagged this top blue line. This blue zone is basically in between the highs of September and December. This top blue line is the September high. Bottom blue line is the December high. So very important for the markets to close over both of these blue lines or below this blue zone. And if it winds up rolling back down by the end of the day and getting below basically the 410 level, yeah, it's not going to look the best because it just looks like a huge fake out on a weekly time frame. So we'll see how the market closes today, and yeah, that's about it. We'll just take a look and take a gander across some things, talking about some of the earnings that came out. And here's what it kind of looks like on a daily. Got that huge gap down, trade higher, and rollover. Now we got the trifecta yesterday afternoon, right? With AAPL, Amazon, and Alphabet earnings, right? We got all three of them, and they all three were bad. They all three were bad. AAPL, this is the one that has absolutely screamed higher today, and it has never done this before. Never. I mean, except for the last time it had earnings. The last time it had earnings. These candles are almost identical as of like right now. They opened almost at the same spot. Same spot. Traded higher. They almost got to this, like, they pretty much got to the same high. The high back on Friday, the 28th of October, was a little bit higher. I can get rid of this downward trend line. Just do that. That doesn't matter anymore. Broke it. But this high is actually just a little bit higher than the high we put today by a few pennies. It's not by much. What was it actually? That's 57.50. This is 57.38. So 12 pennies. 12 pennies. We were 12 pennies short of taking out that high today of last earnings. Now, the thing I will say about AAPL though is how is it going to play out? If over the next few days we see this thing break down and do what it did last time it had earnings, and people just came in and just sold it right down for the next few days. Remember, 'cause we had a pretty good gap down the next day after earnings, which will also be a Monday, right? The day it traded after earnings was a Friday, which was back on October 28th. And then the day then after was a Monday, right? October 31st. And it had a pretty good gap down. And then the Tuesday then on November 1st, we had a gap up and it traded down pretty good. So we had 1, 2, 3, 4, 5 days in a row after that where Apple closed down each one of those days. I'm not going to say that's going to happen this time, but it's just kind of remarkable that today's day of trading after earnings is almost identical to this one. So just very, very interesting to kind of see how that has shaped out there on AAPL today. Take a look at Amazon. Amazon had another gap down, or it also gapped down today, but it traded higher. Basically, I don't know, did it fill this gap? Low of 103.56, a low of 108.88, a high of 108.78. So it missed completely filling this gap from yesterday's low to today's high by about a dime, by about 10 cents. So we'll see really what happens over the next couple of hours and into the next couple of days. But Amazon not. I don't really know how to play that, but we did see a lot of bullishness come out on the market very early on. Obviously, AAPL was leading a lot of that. Amazon, not as much. Take a look here at Alphabet. What's cool about Alphabet, just looking at this before I got on. Alphabet also had a gap down. They missed on earnings. All three of these companies missed on earnings pretty good, too. And I'm going to get into what Tim Cook said on his earnings press conference. But he said something I just absolutely didn't agree with. I'm not saying I'm smarter than him, but I am smarter than him. No, I'm kidding. I'm not smarter than him. He makes way more money than I do. He's got big bank over my little bank. But I do have a dispute about something he said. But what's interesting here about Google is it tried to make a run and take out yesterday's high. Almost did it. It didn't quite do it. It missed by a few pennies. Yesterday's high was 107.85. Today's high was 107.81. So it missed it by about 4 pennies and actually barely did get above yesterday's close. So this also turned positive and then reversed down. So we're seeing some huge upper wicks here on the three big, at least 2 out of the 3 big ones. Obviously, AAPL today with its massive move higher. We don't have much of an upper wick, but it just had such a strong run to start out the day. Let's talk about Tim Cook. Let's see if I can find it on the Apple stock nailed as Cook spooks investors with one phrase. Yeah, I read that article. It's not really what I was looking for. Let me see. Where? I don't want to have to go to the stock page. All right. Well, I can tell you quickly if it's too far down. Basically, he said that they would have seen growth in most markets if FX wasn't a headwind in Q4. So since I haven't looked at the dollar, now's a good time to segue to the dollar. During Q4, which is the beginning of October to the end of December, we saw FX come down. We saw the dollar come down. So what's he talking about? I have no idea. I mean, we saw the dollar come down. Now, he might be talking maybe previous quarter, which was, July, here in July to October. Maybe Q4 was a little bit higher than Q3, but it wasn't much. It's not enough to justify saying that foreign exchange was that big of a deal from Q3 to Q4. And to be pretty honest, it looks like they spent more time at a lower level here in December than it did in July and August. And I'm not running the math. I'm just looking at the chart, and to me it doesn't equal, right? It just doesn't, just eyeball test just doesn't add up. And we also had a higher high here in September, so we had higher prices on the dollar. We just stay a little bit more elevated there in October. We did have a lot more of a sell down really in our first half of November, but we were at this lower level much longer. So this should have been weighted at a little bit more of a lower price level than it was in Q3. That's all I'm kind of saying. Just the price level to me, or the FX of the dollar strength, was really dropping off in Q4. And to me, that shouldn't have been a headwind. So what that says to me, this is what that says to me. He doesn't know. Because if he's saying foreign exchange was that much of a headwind to talk about it, And just the eyeball test says that doesn't seem like it was a huge headwind. It doesn't seem like it was a huge headwind. Let me see if I can. Let me see if this will give me a decent decent a I want a decent oh no, because I forgot DXY doesn't take into account volume. All right, well, bummer. But yeah, it's just interesting that he mentioned that. So to me, it just kind of mentions like he doesn't know for sure why value was dropped, why value came down, but it did regardless. So to me, that's kind of a to me that's a little bit more of an issue that he doesn't know exactly, and he's just saying foreign exchange because of how strong the dollar had been over the past year, but the dollar wasn't as strong in Q4 like it had been in Q1, Q2, Q3. Like those were the run up quarters. Q1, Q2, Q3, Q4 was the pullback quarter. So just kind of interesting. He even mentioned that. To me, it's kind of a sign of they don't really know what's impacting their business, and he's just kind of saying something. That's just my take. This is my take. Hot take for the day, right? Um, while we're talking about the dollar, watch out for the dollar here. I know we were kind of talking about it in the past couple of days. Wanted to see this continuation after snapping this low, quick buyback yesterday, and we're going to follow through more today. This is really important, and the reason why it's important is if this continues to push higher, the DXY, the dollar futures, whatever you want to watch, but if this continues to push higher, you have to really watch the market. If the market is not rolling over as much and the dollar is pushing higher, there could be a much larger move coming in the market shortly thereafter. Okay. One of the things that's kind of interesting is how strong the dollar has been back in the opposite direction from this trend that we've been in for the past couple of months, but we're not seeing that strong of a reversal on the market, right? We continued to make and stay at like new trending highs, right? Not like new all time highs, but we made some new highs, yesterday, and we stayed at them. Having a little bit of a pullback today, but the dollar, like we made a new low yesterday, but basically we opened at that and we moved immediately in the opposite direction. We came straight up, and we had more of that continuation today. So just kind of interesting. And when I was kind of looking this morning at the dollar, when we topped out on the dollar, it was late September. When did we top out or when did we bottom out in the stock market? Well, it was this day. It was October 13th. So the dollar front run the bottom for U.S. equities or the S&P 500, the Qs. Yeah, most U.S. equity indices. So just kind of interesting, something to be mindful of. If this was the bottom and the stock market potentially pushes up, snags a new high here, maybe next week, it would be something that would be, I would say, be heavily sold. It would be heavily sold, especially if you see the dollar kind of rise and maybe even just rest sideways before it potentially moves back and continues to move up. So the other thing about the dollar is we never really retested these two lows here. Obviously, these two lows that we had back in October, we never really retested. We just broke down and just kind of continued a steady drop down. I know over the past couple of weeks, several weeks really, okay, now actually a little bit over a month, I kind of been mentioning like it seemed like it was getting compressed, and watch for that compression to pop and for it to kind of run up bullish. Well, we tried it once here at the beginning of January, kept coming down, and this is one reason why equities kept moving higher, right? The dollar kept dropping, but then the dollar just kind of stopped, and now we're seeing that kind of follow through. What was interesting about this move was we barely snagged a low here from mid-December. We barely snagged that low late December, and then we tried to rally. What was interesting about this move was we tried to rally, we snapped, we went down, and then we snapped and reversed again and came back up. So this is kind of like a double head fake, and usually when you see these kind of patterns kind of take hold, what the double fake is the direction to kind of usually go with on these. So this pattern over the bed we've had shape up here on the dollar over the past couple days is kind of one this is a little bit more legit. This is a little bit more legit, and we're seeing some real strength here come in. Let me see if I can bring up the dollar futures, see what kind of volume we're getting. Yeah, pretty good volume there yesterday. A little bit higher than the two previous days. So we'll see how it interacts with obviously this 103 level. This will be the first real test here, and then if it pops up over that, I'd imagine it's it'll make a move up to this high, which is around 105.60. And then once it pops that, I think it's just going to be on a run to 110. So those are probably the next two key levels. It's going to be 103.50, 105.50. And after it pops those, I know we'll have some previous kind of highs to break through. And those will probably just be, consolidation periods before you continue to push higher here. So just something interesting to watch. This is something I will be watching heavily here going forward, though, is the dollar. Dollar is hugely important. Also getting a really nice pop here on the U.S. 10-year yield. U.S. 10-year is popping pretty good. So all these things are going to put pressure on stocks. So VIX not really moving a whole lot today. Kind of surprised. We've had I would say it's a pretty volatile session. We're not down like hugely volatile, but it's been very much like up and down, right? Like we made strong directional moves in either direction. To me, that's more an indication of volatility than just dropping 2% off the open, but you move within like 0.5% of the open the whole day. Like, usually on those days you get the volatility to increase, but to me the volatility was already baked in at the open. Just kind of interesting to see the volatility here not really move a lot today. Oh, log is off, I can tell. Log and auto off. Okay, so even though the stock market's been moving down here recently, we're not really seeing that follow through on the VIX so much. Okay, yeah. Just interesting. I'm kind of hoping the VIX stays at the level it's at, or even drops a little bit. Maybe even makes a run back down under 18 into that mid 17 area as potentially the stock market looks to sell off here over the next couple trading sessions, maybe even 2 weeks. As that would just kind of give a little bit more insight into people just being complacent and into just not being protective. Gold dropped off pretty good. A lot of people have been talking about gold and silver for a while. We can take a look at the SLV. Gold, though, dropping off really hard today. SLV not dropping as hard, so that's interesting. Gold is obviously probably dropping really hard. It's been on such a strong run. So as soon as you ever got the dollar to pop, you were gonna gold was just gonna get crushed, right? I mean, we just kind of knew it. It's just been so heavily talked about. There you go. I actually thought about trying to maybe even get into a bear verticals position for next Friday. Yesterday, but today's move down. I don't know. I'm gonna have to wait and see at least a little bit of a consolidation. If we come up a little bit here over Monday and Tuesday, I might do it. But that's a huge move down there on the GLD. I'd like to see a little bit of a rest, maybe one day, and then maybe snag it out for like a week or two, depending on what kind of time frame that looks like. HYG. So here's what's also really important. HYG. So the market, the market gave us great buying early on, great bullishness early on. The HYG and LQD didn't get that as strong. We've seen the bonds here kind of just come down, and we do have a little bit of a island reversal here on the daily on the HYG. So that is something to kind of just be aware of. The LQD even, the high the investment grade corporate bonds, they're not really participating. We're not seeing them carry on. We didn't really see them very strongly break out Wednesday and Thursday. They did break out. I'm not saying they didn't, but it just wasn't as strong as the stock market did. And the fact that they're already back below, the Wednesday's close, or even the LQD here actually is below the Wednesday and Thursday open, or Tuesday Wednesday open. Yeah, it just kind of not doesn't smell good. It just doesn't smell good. So starting to see a little bit of early signs of some reversals kind of coming in, and it makes some sense that momentum at least, we have a pullback. I mean, momentum was so strong, uh, really to kind of end out, this week, or really the middle part of this week. And a lot of that had to do with we popped some major monthly kind of resistance top areas. So yeah, it's just interesting out there right now, and so that's really about it. But we are having a fight here to get back below, and this is one of those reasons why I was kind of talking about yesterday about Jerome Powell's masterclass of breaking through these top areas. Even though a lot of people, and myself included, thought they didn't want that to happen because they didn't want the stock market to be runaway, which would lead to higher consumer sentiment, which then would lead to consumer spending, which would lead to inflation, or inflation just being stickier. That's what we all thought they didn't want that. And that's mostly because they had been conveying that message that that's not what they want. They want inflation back down to 2%. And so when you broke over these technical levels, well, now they became support levels, and now we have seen from the open and within about 30 minutes or so, we've bounced off of those September highs now twice. So I really think the Fed was trying to get over these levels and say, hey, you know what? If those levels can buy us support and maybe buy us an extra week or 2 to 3, maybe even a month of time for us to get rates higher before maybe we go into a recession or whatever. I'm sure they would much rather have that scenario rather than maybe the economy is going into a recession and still having to fight inflation at the same time. I mean, that's a difficult task for them to do. Do you crush inflation or do you crush the economy? And a lot of people have been asking that, like, what are they going to do? Are they going to crush inflation or are they going to crush the economy? And it's like I don't know, but I think they were kind of thinking this scenario would allow them to have a little bit more time to get rates to a level that they want to get to and kind of work through those inflationary issues before they had to then step in and support the market if the market does have a downturn. Right? They don't know if we're going to go into a recession. We don't know if we're going to go into a recession. Right now, a lot of the things kind of do point that we're going to go into a recession, but we don't know when that will be. Are we in one now? Is it going to be next quarter? We don't know. But they've already kind of committed themselves to saying, we don't want to reduce rates anytime this year. And yeah, it's just one of those things. Like they don't want to do that because they're fighting inflation. So if they can do anything to kind of help say, hey, you know what? Let's see if we can give the market a bone here and buy us a little bit more time. I think that was a big part of it. But yeah, we're seeing some really good now support level here. But now that we bounced off it twice, and even the most recent one around 1:45 Eastern, it didn't carry us higher. I was really kind of curious to see if we were going to make a run back up, maybe into this neckline area around the 414 to 415. I was just talking about that when I got on the mic. We're getting back down there. So if we break these lows for the daily, we might be just moving right back below 410. And if we do that, that's going to be that'll be a big deal because that'll just be a huge fake out on the weekly time frame, right? On the weekly time frame, snagging those highs from September and December and making a run just right up there to that what was that, about 418 area? Yeah, what was the high we put in? 418.31. So Yeah, it would just be very, very cautionary. Is about the best way I can put it. Let's run through some stocks. So Amgen not going to work out. I actually don't look at the market initially right away in the morning, and a big reason why is I don't really care for the volatility. But if I would have saw where Amgen was opening at, I would have probably closed this out. Probably just would have closed this out. And it is what it is. It's not going to work out because basically by the time I saw this, it dropped off. Amgen dropped off so hard on the open. Just 25 minutes or so, just straight down. I never even got a chance to see it kind of up in those areas. So I should have closed this yesterday at the close. I did see it running up. I did some value there, but I kind of thought it might continue higher, but it actually just gapped higher and then traded lower. So it's kind of done the exact opposite of what the market did to start out the day. Caterpillar, obviously, this is going to work out pretty good. So this will work out for the week. I actually got assigned 3/4 of my put options over the night last night, so I actually had to exercise the other 3/4 to liquidate out. So my account was not, it didn't look all funky, right, with the P&L, because when you get a lot of shares that you weren't counting on, your balances get out of whack. So yeah, did 3/4 of that. So I'd expect 1/4 of it to get liquidated over the weekend, and that'll be full profit for 250. ISRG, Intuitive Surgical. This one kind of shocked me. I'm kind of tempted to take a bearish position here on Intuitive Surgical. I did not see this run kind of coming here. I might set this up for next week. Actually, I might do that here over the next 40 minutes or so. Intuitive Surgical. Yeah, I might do. I'm gonna look to do that. I was really kind of surprised it did bounce there where it did, but my bad. Jeez, trying to get to a weekly. There we go. Yeah, I dig it. I dig this. I dig probably setting it up. That was just a bit aggressive in my eyes. TSM. This one was just a high. I might also do this one for next week. This was a high reward, pretty low risk trade. I'm gonna do this one again for next week. I think a lot of this had to do with, just momentum driven in the marketplace, and I'm gonna look to probably just do this one again for next Friday. AAPL, man, still got that one going. First Solar, saw some pretty good sell down on First Solar yesterday. So First Solar looks like it might start breaking down here because obviously it has not made a new high over January here, or since that mid-January high back on January 17th. So First Solar has not made another high yet. And we saw a pretty good sell down yesterday with the market being up as much as it was. Might start to freaking go in my favor. I hope so. And but that was a very nice evening star reversal pattern that kind of played out over Tuesday, Wednesday, and yesterday. Definitely that bearish direction. So I think that'll probably start to work. Let's take a look though at sector rotation. What sectors are working good? What sectors are not? I already know what sectors not working, and that's going to be tech, utilities. Wow, I did not expect to see that. So utilities are getting smashed today. XLU is down over 2%. XLU is down 2.25%. XLK is only down 0.8%. A lot of that's going to be because what's going on, Dad? How you doing, brother? A lot of that's going to be because Apple is basically the one bright and shining star right now, holding up the market. Look at this. Look at the heat map. Everything's red. AAPL. AAPL had quite a run this morning. Just seems a bit crowded to me. So I'd expect AAPL will probably just start getting hit pretty good here over the next couple days to weeks. XLK, though, is up 0.8%. Took out yesterday's high and then reversed out and came down. Okay. All right. Real estate. Real estate's getting that This is getting the treatment of, yeah, we see rates going higher for longer, so we see real estate being an issue treatment today. XLRE is down 3%. So this is obviously the biggest lagger of the day. XLU is the second biggest lagger. No, it's not. I'm sorry. Discretionary. I'm just not seeing it. Discretionary is the second largest. Actually, it's in line. XLY is in line with the XLRE. So we'll take a look at this. Wow. So consumer discretionary is down almost 3%. It's pretty much in line with the real estate XLRE. And looking at the move that this thing had. I mean, just a run up. It did not get back to positive. It missed it by a little bit, and it has now rolled over. Okay. All right. Anyways, materials is down 1.5%. Industrials down 0.6%. Healthcare is down about 0.5%. Financials are down about 0.5%. Energy is actually the only one positive currently. They are floating right at the zero line for the day. Staples, well, discretionary is down 3%. We looked at that. Staples is down 0.7%. XLC, which is where Google, Meta, and Google are both in the XLC, right? They're down 1.8%. So obviously you see the XLC, why it gapped up pretty good Thursday was because Meta had a monster gap up. I would be outright bearish here, though. Just my opinion. SPY. SPY is actually down 1.15%. I want to take a look at the XLY, XLP, because we know how just hugely extended this was yesterday. And this thing just absolutely... Oh my gosh. Oh my gosh. I want y'all to see this. Look at this. Double top, breakdown, retest this breakdown neckline double top. And, where do we go from here? I don't know, but it's probably, I mean, we're extended here. I mean, this is like 6 weeks in a row at a very fast clip that the XLY XLP has been rising. I mean, it's a really really good spot to just be bearish on that ratio. And we'll see how far it comes back down. Does it come back down to this support level around the 1.9 area? That's a great idea. Makes sense in my opinion. But as far as like being bullish on it, I mean it's just so hard to be bullish on this ratio here, just because it's hugely extended. So, but it happens. I mean, this is what happens in bear markets. I mean, you just get massive overextensions. And when you get massive overextensions, when the flip side happens, they correct at a much faster clip. SPY G actually popping pretty good today. Okay, SPY G over SPY V. So that's growth over value. So that's pretty good. Small caps made a new high today. Okay. Mid caps did not. One of the things I was looking at yesterday was China. Yes, okay. Here, watch this. China's starting to roll over here. It had barely been underperforming this week, and they had been leading basically the global stock market higher. European stocks are not rolling over quite yet. Once it probably breaks below on the IEV here, once it probably breaks below the 49 level, or I'd say probably this whatever this pivot level was, this low of 48.76 back on January 19th. If it breaks that down, then I'd say it's probably rolling over. But right now it's barely getting pushed higher by that 10 daily. So once that kind of reverses, we are seeing China reverse. So we might see a correction here on some stock markets around the world. SPY though, all right, SPY, what are you doing? It's just kind of hanging down on them, on that September high. It's just hanging out there. All right, let me know if there's anything you want to look at. That's kind of all the things I'm kind of watching for now. But the dollar is hugely important. That dollar is hugely important. This thing continues just to move higher, and you've seen some people try to come in and roll it over, and it just keeps grinding higher. And I mean, it took out the morning high, and it hasn't really reversed. It's tried a couple times here, but it is not. So it might be one of those that I'm not gonna say the Bears are in control, but the Bulls seem like they're going to the trough. They're gonna go get some food, some water, take a breather, and we'll see if they can continue if they pull back into support level. Um, but yeah, it's one thing though. You don't want to break down some of these levels you broke through because then it just looks like Bears are going to come back in because it looks like just a huge fake out. So we'll see. We'll see how it plays out here this next week. The other thing I am thinking here, if we do look at a weekly, we do have a pretty large candle. I'm going to get rid of a lot of this stuff. It's kind of hard to see. We do have a pretty large candle here on a weekly. Last time we got a candle basically this large was over here, and this was the last time we had FOMC. So we'll see what happens this time. But I would imagine next week we probably have an inside week. I don't imagine we break the lows of this week. I also don't think we'd break the highs of this week. I think, if it's going to be anything, we're going to just kind of hang out and move within the upper and lower limits of this week. And then maybe in 2 weeks we probably break down or break out. But I would look for that probably in 2 weeks, not next week. So it's kind of what I'm looking for. We'll probably just see stock rotation next week. Probably stocks will probably continue to make highs or lows, but we won't see. I don't think we'll see the stock market itself make highs or lows. All right. Oh. All right. Qs, what are you doing, Qs? Yeah, the Qs are down 1.6%. And that's after what's Meta doing? That was after. Ooh, I might look to take a bearish position on Meta for this next week. High. We did not snag the high of yesterday. High of yesterday was 197.16. The high of today was 196.77. What does it look like intraday? I'm going to do this. I'm going to snag some puts, a put vertical on Meta. I haven't cared to do this in a while on Meta, but 2 upper wicks like that are going to come in a row back-to-back days after a massive gap up like that. I'm going to take that opportunity to say, you know what? I'm willing to snag some bearish positions here. What the heck just happened? So I'm really glad not everything closed, but yeah, all right. That was cool. All right. So I'm going to be a little tight with this. I might be a little bit looser actually with this than not. But I'm going to do this for next Friday. See how this plays out. All right. So we're currently around the 190 area. And let me see what today's low is. Oh man, yesterday's low was like 180. I definitely think we break that by next week. I'm gonna set this. I'm gonna maybe look at 181, 77.50. Yeah, I like that reward to risk. Here's the and to reverse out the exercise shares I got assigned. All right, so I dig this. I dig the reward to risk here. It's a bit extended, a bit too much for me. I mean, this is a 250 winner, right? You get 250 if the vertical puts here are completely in the money by the end of next Friday. I think that'll probably happen because once you get a breakdown of a large gap like this, like it just goes quickly, and I think that'll probably happen. So, what the heck, man? Why does that keep doing that? That's really annoying. Um. So yeah, let me get all the things back up I really need. All right, so yeah, I'll do this for I'll put it in for 55 cents. I'm sure you can probably get a little bit better. I'm gonna count on the broker probably getting me a little bit better, but I'm gonna put it in for that. That way I can set my volume correctly. But I dig that. I dig that a lot because all it's really gonna do is break that 180 level, and it's gonna roll. It's gonna go. It's gonna go pretty quick. 50. I'm just gonna go ahead and mark that. All right, and then oh, all right, there we go. Put that in. Got filled at 51 cents. There you go. All right, so that's Meta. I'm gonna run back through some of these. Amgen, I'm not touching. I don't like it right now. I'm not gonna re-put that in. Let's go and take that off the list. Caterpillar's gonna work out. I can take this off the list. Not a big deal. Do I want to play Cat again though? Thinking. I'll think on Cat and come back to that. Intuitive Surgical. I do want to play this one again. I'm just gonna move this up. Yeah, I'm gonna move this. I'm gonna move that up. If we're getting moves higher. All right, cool. Yeah, I'd rather do it now. Intuitive Surgical. All right, Intuitive Surgical. Let's take a look at this sucker. ISRG. All right, next Friday. It's currently at 2:55. My me. Let me look here. Yeah, it breaks 250. I think that thing's gonna be good. So I'm gonna set this for 250, 247.50. And then if next week really doesn't start to work out on some of these verticals, I'm gonna start to get a little bit. I'm gonna start to get quite a bit more protective because I've kind of been noticing here over the past couple of weeks. It's like not everything's working as seamless as I kind of would like it to be. Been a little bit more choppy. So it's a lot of fake outs. A lot of fake outs. That's about the big thing. Yeah, so I'm gonna do this 250 by 240, 750. For about 85 cents. And a big part of it is, we had a pretty good downtrend. We did get a nice little retest here recently into like these lows, kind of like a little head and shoulders action here. You got a little shoulder, neckline, head, neckline, shoulder, kind of that breakdown. But now we're kind of we retested right there into that neckline. So that's kind of what my thought process is about redoing it. Also, pretty quick snapback this week. So if we just break down a little bit, we don't have to break these lows, but just a quick breakdown next week. I think it'd just be fine. So I'm gonna look to do that as well. On 250, the 250 by 247.50. Put verticals, and I will hit that as well. All right. Knock it off one. All right, there we go. All right, TSM. This is another one I really do want to do for next week. This thing has been on such a strong run. I do want to do another high reward, low risk type trade. TSM. What you got for me, dude? What you got? I might even go back with that one. Tell you what, 92 by 91. I'm going to look at 92 by 91 for next Friday. 92 by 91. 92 by 91. I like it, man. For 22 cents, I dig that. I dig that a lot. I'll put it in for 22 cents just because I want it to fill. I mean, that's so good. It's got to drop 3 points. Like that's nothing for how much that thing's been moving. I mean, that's nothing. And here recently, we didn't make a new high. So kind of says, it's running out of steam. Just running out of steam. So we'll see how it plays out next week. But yeah, if it starts to break down, I'd imagine it just kind of goes. So I'm going to put this in for TSM. And we'll see how that plays out. 91. There you go. To the surgical. Did I change this? I took it away. Settings 257.50. 247.50. All right, there we go. I'm cool with that. TSM. What you got going on, dude? All right. So yeah, I'm going to put this in for 22 cents. See how this kind of plays out here. Works. Boom. Got filled at 21 cents. All right. So there's that. That was 92 by 91. Put verticals. All right. So those are 3 that I got so far. I'll tell you what, I'm not going to worry about cat. I'll take that off. What was the first one I put on? Meta. I didn't add Meta to the list. Meta. There we go. And 2 to surgical. Yep, I like it. Meta. Yep, like it. TSM. Yep, like it. All right. AAPL. I already got a position here. But man, what a run this morning. What a run. Oof, man, the market is just hugging that September high. You can tell it's just not wanting to give that up. Just not wanting to give that up. There's so many. This is what happens when you break major support and resistance levels. People now go from, triggering buy orders or stop losses to now they're triggering now they have stop losses in the other direction, or now they put, buy orders on top of this level, or whatever, you broke out, right? We broke out a couple days ago, really with the gap up yesterday morning. We broke out, and now people just said, okay, I'm going to look for the retest into that zone or into that spot, and I'm going to say I want to buy off of that zone now. Now we broke out above it. But we'll see if that holds up into close or whatnot. It'll be can't explain how much the close here in about an hour and 15 is for the week. It is huge importance. Huge. Intuitive surgical. Yeah, Meta. Yeah, I'm cool with a lot of this. Intuitive surgical TSM. I'm cool with a lot of that. And big part of it is Apple's. Man, Apple is just super extended in my opinion. And yeah, I mean, not saying it couldn't go higher. I guess it could. It could. I just think there's so many better opportunities out there right now. I'm gonna look through some of these AI stocks. I'm gonna really look through them. So that's STEM. Oh, look at AI. Oh my goodness. Picked the wrong one. I picked the wrong one. Look at that move. That is a monster move. You know what this is? This is people getting on that AI bandwagon and buying into a stock that just has the name AI. Wow. That is nuts. Yeah, it's a Wall Street bet stock. um, oh, after unveiling generative AI suite. All right. Okay. All right. What about Path? Path doing anything? No, not really. Man, AI is the stock. Woo. Man, that is nuts. I wouldn't be touching it now, though. That's just people that are like, okay, how do I get AI exposure? They type AI into ticker symbols or into anything. And they're like, hey, here's the stock literally called AI. Or their ticker symbol is literally AI. Like, okay, cool, I'll buy that company. That's what that is. Alrighty. Let's see. Exxon. Oh, you know what? I meant to do the Twitter. I want to check some of those other earnings. Um, Twitter home. Boom. Profile. Where's that? This works. I need to tweet out more, I guess. Ford, Qualcomm. Ford. Ooh, Ford. Big miss. Big miss on Ford. They missed by 18%. Ouch. That's rough. SBUX, Starbucks. I know they missed. I saw that last night. Yeah, I missed on top and bottom line. Missed bottom line by 3%. Ooh, United Steel. United Steel Materials still doing good things. Beat on bottom line by 64%. Beat on top line by 7%. All right. Gilead. GILD. Gilead Science. Huge upper wick. Wow. A gap down, gap up past 2 days. Gap down, traded lower, then we gapped up. Man. That's nuts. Wonder what that 1 minute was look like. If that 1 minute, yeah, you could have definitely played that. You could have just played that 1 minute candle, doing that with a stock position, not options, but super solid gap and go. It would have been cooler to see that first 1 minute come in red, but I mean, I like this. I would have set that up. Mostly because the previous day gap down. Yeah, that looks super nasty on a daily time frame. All right, what else? What else was out there? Oh, Qualcomm definitely gapped down pretty good. They missed on revenue by about 1.5%. They beat top, but they beat bottom line barely. Basically, just came in line. Not a big deal. Clearfield. All right. What do we got? CBOE. I'm gonna look at Friday morning. CBOE. What is? Oh, all right. Ooh, man, this thing has just been all over the place. Not look at how tight of a range this thing's been in for a while. 115 to 128, roughly 130. It's been in a 15-point range for about 6-7 months. So, yeah, that's they missed on top line, but they beat on bottom line. Yeah, that thing is man, it is in a zone, man. It's just not going much of anywhere. Wow. All right. What do we got? All these others I don't really know. Don't care to follow that much. All right. Let's see. What is the heat map? What is like transport? CSX. I know transport's been moving a lot here recently. All right. Transport's coming back over the past couple of days. CSX, UNP, NSC. All right. After their earnings, they dropped off pretty good. But this week, they all got the buy basket going. Until today. What do we got here? I'm going to set an alert here. If we break this low of 411.45, and really if we break these two lows, I want to see. Actually, you know, I'm going to set it right here. If we break, set an alert. Alert may trigger differently from what you expect. Okay, yeah, fine. I want to see you. So if we're looking around, I just want to see that. Anyways, get back to it. JB Hunt. JB Hunt's been moving positive ever since they announced earnings. Okay. What about FedEx? FedEx and UPS did pretty good. Or is UPS? Is UPS. So UPS looks like they had a pretty good quarter. They've continued that follow through in the bullish direction. Okay, FedEx. Obviously they were doing pretty good. All right. Okay. Not looking horrible. Who else? Who else is out there? Let's look through some of these semiconductors. AMD, man, AMD just strong run Thursday, Friday, Wednesday, Thursday. Wednesday, Thursday. And then Nvidia's been strong. This has been a lot because of the AI stuff. Nvidia's been getting a lot of play from AI type news that's been going on. Ooh, Intel snagging basically December, January highs today and coming back down. Okay. And then, so that's Intel. Man, what else is out there? Qualcomm. We did look at Qualcomm, right? Gap down, trade higher, yeah. AVGO. Cisco. TXN. Nice little upper wick there. TXN. Intel, Qualcomm. Yeah, that's basically it. I think. ADI. Yeah, that's pretty much it. Kind of curious. Microsoft, what are you doing? That's the thing, man. Microsoft has just been struggle busting. Second largest company in the market, and it's just struggle busting so hard. Those places and those stocks to go hide out in are getting few and far between. That's all I'm gonna say. Few and far between. Not Meta. What was? I did look at Netflix, right? Yeah. Oh, Amazon. How's Amazon's rolling down? Apple's, hey, APL, man. It's like it's so crowded. God, it is so crowded. The market cap for AAPL is now 2.55 trillion. Microsoft is now 1.9 trillion. 92 trillion. Oof. That is so weird. Goldman Sachs, what are the financials doing a couple days after Interest rates. Goldman Sachs been on a pretty good run here the past like 2 weeks. It's not bad. Goldman Sachs, pretty good. J.P. Morgan, looking pretty good. Bank of America. All right. A lot of buying these financials. A lot of them have been just now pushed up into kind of like their previous highs, kind of like the little neckline that they had, especially here on Bank of America. Wells Fargo actually got up to those highs that it put in back in November, early December. And then BlackRock, not as volatile over the past several weeks. That's kind of nice. Blackstone, not looking horrible. Citi looks bad though. Broke those November highs, but yeah, I mean, past 2 days not looking the best. Okay, we got some weird looking stuff out there in the financials. That's about all I can say. Schwab, AXP, yeah, I'll look at AXP, American Express. Their earnings were not the best. Yeah, I mean, they missed on earnings, but I think they said some positive things about the consumer. Like, consumer's not looking too bad. Little sidestep pattern here over the past like 4 days after their earnings, and then continuation higher today. See if it continues to do that into next week. Visa, a little reversal top yesterday. MasterCard. That's the thing, is this going to take such a long time to break down on the market. Such a long time. Because you got you got price levels that are no support. You got moving averages that are support. You got trends that are support. There is so much support out there for the market. It's just going to take a long time to break down through here. And it might happen here over a couple of weeks. It might take the whole month of February, but I would imagine it probably does happen. That is, after a strong move to end out the second half of January, I mean, this little blow off the top that we had Wednesday, February 1st, and into the continuation of yesterday is just a little bit much. We are about to break. about to break that low doesn't mean we are. We almost broke it back over here. So we didn't. That's when we reversed. See if that happens here in the next couple of minutes, and then it'll be weekend time for me. I'm gonna go roll outside with the dog. Dog just lifted her head like, wait, what? Outside? Yeah, outside time. It's finally sunny. Finally sunny in San Antonio. About time. There it is. Ooh, that was loud. That was a sharp pitch. Yep, and there you go. You get a little quick follow through. There you go. All right, we'll see if that continues going into the last hour. And I would, dude, that was loud. I know. Yeah, I would definitely say. The next one is going to be the low here from the open. Yeah, I'm going to have to go adjust that. I don't really set the alerts too often. But watch this open that we put in today. The low of 411.45. We just hit a low of 411.56. And so we're not far away. And if we just kind of go sideways in here for a few, maybe like 10, 15 minutes and then drop off, I mean, we can make a run and get back below that December high down to about 410. Yeah. So that's the things I'm watching. I'm watching those two levels. Those are big time levels. We make a run back down to 408. That'd be below the last week's high. I don't think we get there today. But getting back below 410, if the market could do that, that'd be huge for the bears. The DXY though, I'm going to continue to watch the DXY dollar. That is a super strong move. Past 2 days after a breakdown. So yeah, continue to watch the dollar. That's going to be hugely important. As the dollar's moving up and the market's not dropping off in a kind of like a comparable type, rate that you think it should be. Yeah, I'd be real careful on being bullish on stocks. Anyways, Alpha y'all have a great weekend, and we'll see what kind of folds out next week. But we had a very busy week. Definitely saw the market take out some highs this week, and it looks like it might be reversing here late Friday. So we'll see if that happens. Ooh, did it just do it? It did. It just did it. It just took out the opening low right there. So we'll see how low the market trades going into close. Alrighty, take care, Alpha Hunters.